Welcome to StockMarketFunding.com. What you have before your eyes is a Dow Jones chart, which is 30 stocks, and it's 9:05 a.m. Sunday morning, 2/28. We're going to be talking about the 10-year history of the bear market history of the Dow. So, welcome back to the Dow Jones chart. What I'm going to talk about is I'm going to give history of the Dow starting at 1970 and what went on between 1970 and 1978. And another thing of it is, I can just show you here, for many, many years, we went sideways in the Dow. Look at all the years. So in 1970 to 1978, naturally we had the biggest bubble in what we call the super highway to inflation. And here is the 1970. Each one of these are a calendar year on a monthly chart. And what happened? You had great failures. You came up like that, and you had failures. And then you went sideways for a number of years in a trading range, people. That's why StockMarketFunding.com, we have a mathematical yearly trading system. So 1972, straight down in 73, and straight down in 74. Then we came up off the bottoms in 75 and up into 76. But again, all of the stimuluses and all of the things that were going on back then, kind of like what's going on today, is that, here's the monthly chart, is that we had the failures. 1976, I remember that day. That year, I remember 1977. But you see the down moves in the Dow to the up, to the top reversals. Then from 78 to 80, we just went sideways in a professional trading range. We went right back up off the bottom to 1981. And then as I scroll over here, let's take a look. We failed again in 81. And then the great bull market started in 82. However, when I go back over, we were in a trading range from 1970 in these markets until 1982, where the beginning of the bull started from the 82 upcycle to the 83. Of course, this is a long time ago. You were only at 800 on the Dow. And today, as we move forward through history of the Dow and the bear market of the Dow, is that we're going to take a look during 1982 where we topped off and what that 10-year range was between 1900 and 82. So let's pull up where it started and where it ended for a short period of time. And basically in 1982, we had a multi-year expansion, but the world was quite different then. The only thing about it is that we still had exuberant stimuluses working. We had various different bear markets in history, or bear economies. What the main focus is here, folks, is that what led us up back then is the same kind of behavior that we have today. And back when we had the Gulf War, once again another war, we went up on the Dow. And it was in 1984 that we had that big move. We also had the big hiccup right here during the 1987 crash. And basically that was on the Dow, and this is the Dow 30, and then we took off. And it was a good time to be invested. You got to know when the upside's going to be there. But the point about this tape, people, is that everything that they started back then is finally coming to an end. Because if you go back to 1970 to the current 2010, how many years is that, folks? Can anybody answer me? So one of our pro trading students, Tammy, said that's 40 years. That's 4 decades, folks, on the Dow 30, which is only 30 stocks to move this index. We call it the Dow gimmick, by the way. And basically, when we ever had a war, the 1987 crash, back in the S&L banking crises back at that time, good bank, bad bank, kind of something like we went through right now. History has a way of repeating itself, people. And the thing I'm going to show you is that there are times to take advantage of exuberance, because you're learning here in our school to be the trader and the investing trader. Full-time trader and investing trader are quite different, but we teach all of it. And what I want you to know is that we had a big correction right here. Let's pull up this part of the chart. Look what happened in year 2000. And we're going to talk about the bear in 2000, which went straight from the top of the Dow, straight down to the bottom where it started in 1998. My point is, in this segment, to that top, this was all stimuluses and exuberant. Of course, you know, the world was quite different because it was only the beginning of the 4-decade bubble that you face today in the world you live. And basically, guess what happened? All the way back down to the bear. This was the bear reversal in 2000 on the Dow. And we came, and guess what? It failed. And it failed, and it started right back over here where it did in 98. But my point of it is, it failed. Then, just like I showed earlier on the tape, another war. Expansion. Wars, well, between 2003 and 2007 was probably one of the biggest tops put in the Dow at 14,000. And from 14,000 in the Dow bear market history, we went straight down. And guess what? Where it all started over here, across that trend line, it went right back to 1997 where it started. And let me tell you something about irrational exuberance. Humpty Dumpty fell off the wall. What a great fall. And we were short up in here. The point that I want to tell America and investors and traders alike is that I haven't seen one yet that has had sustainability. If this move from 2003 to 2007 had any legs behind it, this was the greatest housing bubble ever. And this was the tech bubble over here. And everything that I said in the NASDAQ bear market history. And let me tell you, these were tradable ranges and investing ranges. But they all collapsed, and we ended right back where we started from. That's because dishonesty, manipulation, the financial system being manipulated by various different presidents, different Fed governors. Greenspan was involved in 17 years of this Dow chart. And basically, what I want people to know is that we went all the way back down. When we were up here at 14,000, you think anyone ever thought you would lose over 9,000 points on the Dow? No, they did not. And I'm going to go into part 2, and we'll continue in part 2.